Robert, we have new numbers in for labor data. Would you still describe it as positive?
Yes, Susan, we got a pretty solid number today from the Bureau of Labor Statistics, the July employment survey, saying we gained 164,000 for the month. That's not a bad number at all at the headline level. And then the unemployment rate stayed the same at 3.7%. So the interesting part to me was a number that we don't report on a lot. It gets buried a little bit, and that was average hours worked started to tick down just a little bit. And so we look into that as manufacturing gave back some hours. That could be consistent with seasonal adjustment problems with the auto industry. They shut down plants in the summertime. Sometimes it's a week early, sometimes it's a week late. So these summertime numbers for manufacturing can get out of whack, but it's something to keep our eye on.
Well, we are seeing those numbers decline. This is the fourth month in a row, right?
Yeah, we saw the ISM manufacturing index decline for the fourth month, as you said. It's still a positive number, 51.2, but it's not that positive. And so the concern there is that if you look at the same series for other economies, for Asia, for Europe, you're seeing their purchasing managers index, we call those PMIs, we're seeing their PMIs falling below 50 for the manufacturing sector. So globally, there's definitely a cooling pattern in manufacturing.
All right, let's move on to what happened with the Fed this week, lowering the rate. Now, it's been a couple of days since they made the announcement. What has market reaction been so far?
Well, it's been sort of mixed. I mean, there are certainly those out there who would have liked to seen a bigger rate cut, 50 basis points. I think the Fed did the right thing by bringing rates down in response to the global indicators, in response to uncertainty in the U.S., and also in response to other global central banks. It's sort of an elevator problem. If everyone's coming down at the same time in terms of rates, the Fed has to come down just to stay even. So there is a global monetary easing right now, and the Fed does have to keep up with that. If they did not, that would put upward pressure on the dollar, and that would be bad for U.S. exports. So that would be an economic drag if they didn't have that 25 basis point cut.